Hello there, and welcome to this symposium on the 16th of January 2017. Today we are going to look at ways to qualify valid areas of supply and demand using the two rules that we have. So you can do it by identifying areas of supply and demand that consume opposing supply and demand, or you can qualify them based on an area of supply and demand's ability to break the structure of market. And how do we consider the structure of the market? Well, we use trend lines typically for this. So let's have a quick look. Make sure my screen is being shared. Yes, good. Okay, so we can see if we open a clean chart and we have a closer look at price. Okay, what we have here is we have something that's very important, and this is the accumulation candles that we can see moving throughout price, so the white candles here. And we have, let me enable some lines here. We'll enable these areas of supply and demand. The indicator draws for us, so we set this to true. We go like so. Okay, good. Okay. You can see that we have this area just up here. And if we consider, for example, using rule number 1, an area of supply that consumes opposing demand, we can have a look, and you can see that we have to be able to look at these points clearly. And I'm just going to draw this in quickly. So we have, I need to disable this like that. Good. And then we have to draw in these swing points. So we have a high, we have a low, we have a high, low, high, low. I'm just going to draw these in just so they're clear. I'm not going to take all the little ones, but just the kind of the major ones. Okay, so in order for this to be considered supply, it must consume opposing demand. And what is demand? Well, demand is an area that is capable of using the same rules, either consume opposing supply or break a trend line. And if we consider, assuming that this is all we can see, so from the left and forward, this is all we can see, you have to consider for a moment, okay, where is price now in relation to what we have historically? You can see that this area here, when price left here, we didn't really consume anything opposing. We have price that when it left here, it moved above this high, which makes this important on the 4-hour time frame, but on the daily time frame, this might not be visible. And so you have to also remember that areas of supply and demand are qualified and only valid on the time frame that you use to qualify them. So you have this area. I'm just going to use the Pipnotic tools to draw. It's probably a little bit easier and a bit clearer. So if we have this one here. So we have this area here, which is considered supply, because when price left, it managed to take out this, assuming that this opposing supply at the top, price came back, we tested it, and we moved down. And you can see the price managed to move through this. So you have to identify the area that did that. Well, we have a continuation pattern, which is here, and this one here is actually the one that's responsible for sorry, I thought an algo trader just did this, but it's not. It's just me. Okay, so you have when price went through here, this is the one that did it. So you could say that this one is actually the one that's responsible for consuming this one here. And then there's a continuation pattern. If you consider, for example, the depth of the curve, we are very, very high up in the curve. So this is not even the 23%. We're talking maybe 10, or 20%. So this is not a good area to buy. It's way too far up. So ideally you want to take at least 50% into the curve. 50% brings us back into somewhere around here. And you can see when price went through here, this has been removed, and then you want to find the parent that broke that. And you can see that we had a trend line here, and this trend line was broken by, we have the parent and we have a continuation pattern just below it. So you can actually take this one and you can move it like so down to here, because this is a continuation pattern, the one that managed to move price above. We have a more important area just below here, like that. And so here we have two interesting areas. You can tell this one's important because when price went up, it tells you exactly where you want to consider to buy, or it tells you where the edge of the area is. See, price came back, it tested the area, it moved up, and then it moved off. We came very close to it. So this is the first test, this is pretty close to the second test, and this is a third test, and this is the one that actually broke this area, removed this area. So then you take the tool and you move it like this, and you have to mark off the area that consumed the supply that we're looking at. And your entry is at the bottom of that area. Your stop goes just above. and as we looked in the last week's last week's symposium, you can remember that we talked about entries, stops, and targets. And so where would a logical area to take profits be? Well, would be just here at the top of this continuation pattern. This is actually a child. This is the parent. So we had a parent was established, price moved higher. We accumulated for 1, 2, 3, 4, 5, 6 periods. Then we went up. Price tested it on the edge, which is exactly where we should have taken our profit. You don't want to be getting greedy and expecting price to move through this, because while it may very well do so, it could very easily have a tough time doing so. So just make sure that you have at least no risk in the trade when price gets back to this continuation pattern. So price stabs into it and we continue higher. And so if we consider this trade, for example, I mean, your entry would have been here, your stop at the top, and your target would have been down here. And this is supply, because when price left here, we managed to move below this low, so we managed to move below this demand. So this is supply. And also we were testing the area of the first area of accumulation or the one that broke the trend line, caused a trend line break, which is here. The original point is just down here. And so this would be your first attempt to trade. The second attempt would be down here. So price went up, we shorted, we got out of the trade, and now this has been taken out here. So then you ask yourself, well, what area of demand took this out? Well, you can see that we had something in here that did it, but this is super ugly. And I say ugly because there's so much accumulation going on here that you can't put a foot on anything at all. And so when you have something like this, you don't want to touch this. You want to look lower. And I mean, the best place to look is at the tops and the bottoms, so the major swing highs and the major swing lows, because these are the most price sensitive areas. So price was a high, we had a low, a high, a low. Here we had another trend line break. The area that broke the trend line was just down here. We had very ugly accumulations we talked about. So the parent, or the point of origin for this entire move starts down here. So you take this and you move it down to the point of origin here. You can see there's a lot of wicks in there. And so ideally you want to look at kind of a test at an edge. And this is the one here. You see how price left a green candle, we accumulated, we stabbed back right at the edge of an area. So that's where you want to put your entry, just here. And price came back, we just poked through it, and then we went up. Where would you want to get out of the trade? Well, an opposing area, which we have just up here. And this was actually a short. We took some shorts up here at the top. And so that was a very nice trade. You can see that this area was taken out by what area? And this one. This was also taken out. But what area took out this one here? It's this one up here. You can see that if we draw the area in, we could do it like that, which is also the edge of a weekly area of supply, which is nice. So we could expect a reaction here in the future. Alternatively, you can see we have a very big wick here, which tells us that we want to look on the smaller time frame. So if we go to the smaller time frame, go to the 1 hour chart, in order to get some clarity, we can do so by just having a little peek, and you can see we have a 4 hour area, and we can just take the 4 hour area, we can move it up just here, because this is now what we want to look for. So you go back to the 4 hour chart, and you can see it looks like that. And the indicator drew the line for us perfectly. And that's at the 7,700. So that's a really nice area to sell. The stop going above the high there. Alternatively, you could wait for price to come up to the 7740 area and sell there, because this is the price level that price came back to last. And you always have to ask yourself, when price leaves an area, and then you ask yourself, what is the most expensive price retraced to on its way down? Well, it's this area up here, which is I mentioned the 7738. Sorry, the sun is blaring through my window today. It's gorgeous, but it's also a bit difficult to see the screen. So just here's a really nice place for shorting. Alternatively, you could take this one here, as we looked at earlier. I'll just mark that off, just here. Or you could take the weekly area just here. And just for the sake of an example, we're going to go to the weekly chart and have a look and see why that would be a nice area. Well, that would be a nice area because you can actually see that the whole weekly area would be marked off like this. When we have a really an aggressive area, which would look like that, which is 188 pips, very big. You can see that we have a lot of these really nice candles. This structure, how price went up, we accumulated, we did not close below where this entry is. And on the weekly chart, this candle here, this high, is the most expensive price managed to go on its way down. So this is testing the edge of an area. This is a weekly area, and so this is where I expect price to go to. And that's the 7882-ish area. And so I like that area, which is also at the edge. It's close to the 7590 area of the weekly. So I'm expecting price to do something there. And also you can see here on the departure, when price managed to, when we came down to this low, we went up, we came back down, we tested this level twice, and then we cut through it, then we tested it just here on the departure. So this, in my world, is a pretty nice place to short. And you want to put your stop kind of above the previous candle here. I don't know if it'll hold, we'll have to wait and see, but I think we're probably going to get a decent reaction just there for these reasons. This area here I wouldn't sell at. I would not sell here because it's just simply too messy. I think price will cut through that. So we'll have to wait and see. But you can see that, I mean, qualifying these areas, it's simply about marking off an area in the past and then moving into the future. And so identifying the area of demand that consumed opposing supply, or the area of supply that consumed opposing demand, and just doing this process over and over again. You can see this. I mean, this is a nice area here, because this is, of course, it's the all-time high for what we can see historically on this time frame. Price came down to this area, tested it, we came up, and it tested this parent, this is a child below, and then we managed to move through it. So the point of origin is here, parent, child, and the child is actually responsible for removing this demand. So the child is the one that we should target for our entry for this one here. So you have to identify these areas that are responsible for doing the damage. And I spent a lot of time trying to get my head around how I can incorporate this into the software, and I'm working on it slowly. But I'm thinking that in a coming future version, I will have, for example, a green circle around here. We'll have a red circle around here, and there'll be a line between them linking them up, so you can see that this area of demand was consumed by this supply. But this is something I have in the books at the moment, and it's not completely uncomplicated, and so it's going to take a bit of trial and error in order to get that right, but it's something I'm working on. And then we have another rule, which is a trendline break, which we've also touched upon now. And trendline breaks are good because they give you very clear places that you can enter trades, but at the same time, you have to be careful with them, because a trendline break is not just a trend line break, and you don't want to trend it blindly. And so you can see that, I mean, we have a high here, price left. We removed this demand. This is the parent just here. Why is this demand? Because when price left here, we moved above this high, and we moved up here. We moved through here, moved through this demand. Price came up, tested the supply that broke this demand, and we cut through, and price moved lower. And so when you're drawing these trend lines manually, you have to do so very carefully. You can't just take two trend lines and draw them. You can't just go, let's see, where's a bad example? You can't just go, for example, from here to here. We have a high, a low, and a low. You can't do that. What you do have to do is you have to ensure that you choose valid points. And what makes a valid point? Well, the valid trend line point is, for example, we have a high, and price leaves. This is H1. It forms a low, it comes up, it forms H2, which is a lower high. And when price leaves H2, it manages to move through and beyond L, which is L1. And then we have a price will do something after this. We don't know what. And then so what we can do is here you can join the points H1 and H2, which will cause a trend line that looks something like this. You can see that this area down here moved up into the trend line. We had some rejection, price moved back in, and this area here is the one that is actually at the base of the big move above and beyond the trend line. And so this is our first target to buy, and our second is just down here. So this is the most preferable, this is the most close to price, and this is the second one, which is kind of the source of the move. You have to be careful as well that by the time, assuming the price comes back here, we come back the first time, second time we move deeper into it, third time we manage to do this, and you can see by the time price has done all of this and we start to approach here, the sentiment for this pair has changed, which reduces the likelihood of this level holding. And so just be a little bit careful when you start to have really strong moves down like that, moving against your directional bias. Just be a little bit careful buying here. And also, if we have a look, actually we can have a look on the indicator, you can see that up here we have a red line, and this red line tells us that we have a daily supply up here, and price is getting pretty close to the daily supply. As a matter of fact, the lines here, you can see we have the red one here, this is actually a very conservative entry. So the area of supply, daily supply here, probably starts somewhere down here without knowing. And so price has had a test. You know, we've had one test, 2, 3, 4 tests, and this is on a weekly chart. This will look like one test. So price has kind of come up into this daily area, and now it's coming down here. So this is simply price moving up at this daily supply, accumulating short orders. So lots of white candles up here, and then we have the push through. And so you don't want to be buying into daily or weekly or monthly supply, because you'll simply find yourself getting stopped down an awful lot, which is why it's super important to start on the higher time frames and move down. Okay, so I'm going to go through this once again, just so this is super clear. I'm going to remove everything like so, and we're going to take a different pair just so we have something different to look at. Okay, then we can see here that we have a pretty chart. You can see here that we have a low, a high, and a low right now. And so when you look at a chart, even on the 4, you have to notice where these big swings are. Because if you just if you cut this piece out here and you look at that, this doesn't tell you anything about about the big swings. So you have to notice, pay attention to the major swing. This is very, very important. Okay, so what we do is, ideally you have to, and we're going to focus on using qualifying supply and demand, using the rule of opposing supply and demand consumption, and we'll do this simply by marking off a level. It can be any level. So we'll start off by, let's find a valid area. Let's go on the daily chart, and so we're going to take this one here. you take any valid area. So you take this one here, and then you ask yourself, okay, is this a child or is this a parent? This is actually a child. Why is this a child? This is a child because it's reacting on this. You can see when price left here, we moved above this high, and this area of accumulation is the one that broke the high. This is where price came back to. And so asking these questions gives you all the information you need. So we'll move our area like to here. You can see price went up. We tested it. This area of supply broke this demand, so we move the box here. Then you say, okay, what area of demand broke this area of supply? Well, we have a continuation pattern here, very messy. We also have a parent down here. So we move the trend line down here. First we're going to move to the child, which looks something like that. Price cut through it. We had a test here. We had almost a second test, and the third test actually went through. We had closes below this child. And what area did that? It's this one here. This one here has done that. So this is the one that's responsible for breaking or consuming the opposing supply. Demand, sorry. Oops. Okay, and this one is still holding, which is good. So this one's still valid. And then if you want to go and have a look a little bit closer to price, then you can do that. You can simply do the same thing. So we'll go here and we'll say, we'll have a look here and we'll say, okay, we had a low here. So we had a test, and this area here is the one that went through it. So we have to ask ourselves, what went on historically to the left here? So we're going to have to scroll back. We're going to have a look because we have some kind of demand here. We're going to have to probably go out pretty far. I'm not even sure if my broker has historical data that far back. Hey Volker, no worries at all. No, we don't have any data to look at, but you can see that this is an area of demand historically, which we can't see. If we go to the weekly, we might be able to see it. No, zoom out a little bit. No, we simply don't have any. Price has not been that low. But on another platform, perhaps maybe there is a reason for price stopping there, but we can't see that on the price feed that I have from my broker. But what we can see is that it was important. It held once. This is the daily chart. It held twice. It came down and it accumulated pretty close to the area, and then we went through it. What we can do is we can dissect the structure of price at the test of this level. And you can see here that we have this. First of all, we have this up here. Price went down, it tested. This is not a pretty area because you see when price left here, it didn't move forcefully. But the area that's a little bit clearer is the one just below, like so. Price left, it tested it, and it moved down. It has not been back since. So this is a decent area, the 3260. This is also in line with direction of the swings. You see we're moving down very, very quickly. And then price, we had a price imbalance. You see how we had almost no pauses on the way down. Now price is starting to drift higher. We referenced the low of these wicks here, almost to the pip, and now price is beginning to sell off again. And in the meantime, we've had a trend line break, and now we're also able to draw a downward sloping trend line. So to the upside, we have this area of supply, and we also have this just here, because when price left here, it cut through and had not been back since. So if we go to the 4-hour chart and have a closer look there, you can see that, I mean, this is the area. I want to draw this properly. We'll draw like that, because we had a test. This seems to be the area that's sensitive. Then you have this area just here is the one that caused kind of the break of it, and this one happened just after the level. And so this is a very small 4-hour continuation pattern. And so this is difficult because if you would trade here, your stop would have to be a little bit higher up. So what you can do is you can look higher and you can say, okay, we have this pattern that went up, we have price that left the area, tested the release and has not been back. So we have a parent, we have a child, and we have a younger sibling here. The one I like is this one looks okay because see how price tested this level before it went down. And so I think this is roughly the area we'll have a test if price manages to get up there. But it's tough to say because price is really moving low there. What we can do if we want to start our analysis a little bit closer to price, we'll have a look on the 4-hour chart, very close to where price is, and we can have a look at, let's have a look, we'll take this one. Established, price tested it, so we have a parent. The child caused the break of this high, which is nice. And now this one is no longer valid. Why? Because when price came back on the third test, first, second, third, it cut through it. And so what area broke it? This one here. So you move in your area like that. So now we have identified a 4-hour area of supply, still untested, which is nice. And this one is responsible for taking this one out, which is great. And then here we have some more stuff going on. We have, let's see, we have this one here. We spoke about this one here where we had price that did this. Like so. And price, you know, ask yourself what area took this out? This one did here. And so you go and you have a look at the area that took it out, and it's this one here. So we can ideally move it like so. And then whenever you identify a level, it's good to go on a higher time frame, and then you can have a closer look. And then you have to ask yourself the question, has price been back here since then? And so assuming that our entry would be here, we'll move this, and you say how expensive did price get on the previous retracement? We went all the way up to here, which is just here. And so go back to the 4-hour, and we redraw this. You can see that our entry is from here, and we'll put it over the previous accumulation like so. So we had a test, we had another test. What area broke this area of supply? Well, we had this one here, and we had also something down here. We have this big wick here, which is a bit difficult. So we'll have to go on a smaller time frame and do a bit of dissecting. So we'll mark it off. I'm going to go from the low to the high, and we're going to ask ourselves, well, how far back did price come historically at the release? You can see, well, we had this level here, and we also had this one down here. So this is a more aggressive buy, and this would be the more conservative buy. And this morning, price gapped through it and completely took this one out. Then you ask yourself, well, what area of supply took out this this demand? And you have to look up here. Well, this one did something up here did. So we had something just up here. And again, you ask yourself a question, how far back did price get? Well, it got back all the way up to here. So price went down, we tested the supply, and then we gapped down. And so ideally, you don't want to be selling this for a price any cheaper than, let me turn my screen, than the 122.25 area on a potential retracement. We'll probably get a reaction in here, and we'll probably also get a reaction down here. But around the 12200 area, but this is, you can see the price poked up into here, and this quote-unquote stack of pancakes is being consumed by these hungry buyers. So we had, you see the pancakes, they got smaller and smaller, the stack, and so we only have a few at the top here to be taken. But so the next pancake is going to reside somewhere up here like this, like that. And if you look left, you have another poke here, which is roughly where price tested on the release. And then after that, then you have this top just here. So price went up and up like this. And this one's been taken out by, this one here has been taken out by this. So price rallied, came back down, we accumulated, we rallied, we moved above this high and through this. And this one here has been taken out by, which one? By this one here. Before we do anything, we have the accumulation candle. This one left the area. The most expensive, the cheapest you want to sell at is here. And they want the stop to go above that. So entry there, stop above there, plus a couple of pips. Price came back to that area, stabbed into it, we sold off parent, child, we tested the child, then we gapped down this morning. So that's what you want to, that's how you want to identify these areas when you're looking for opposing supply and demand consumption. I hope that's clear. I kind of jumped all over the place there, but okay. But what I normally do is I start on the weekly chart and I do my analysis and I move down to the 4-hour chart, and this enables me to be mindful of these big areas. And so you can see here on the weekly we have this. You can see how we had a test, price accumulated at this level, then cut through it. What does that tell us? Well, that tells us that there's demand here. Historically, we can't see it. It's further to the left. It's old. And this is where we want to sell. And you want to sell at a price no cheaper than the high of the release, which is the high to there, like that. So 129.46 would be a really nice short. Yes. So we've identified that. We need to identify valid demand. Is there demand? No, there isn't. There's no demand, which tells us that the thin liquidity is moving down. If we have a look at the currency strength, you'll probably see that it's a pretty clear one-way street. Price just seems to be dropping off on the pound dollar, especially on the weekly and the higher time frames. If we have a look here on the daily chart, it's a different story. Then we have a lot of things going on. We have an upward sloping trend line, so a low, high, higher low, higher high. Price formed this accumulation, daily accumulation. When price left here, it broke the trend line and it took out this low, which was the second point in our trend line. So this is there's demand in here. Where is there demand? Well, I'll show you where the demand is. So from this area of demand, you can see how when price left, price sat on this area of demand, and there were no closes into this area. Price finally went higher, and then price broke down, and it sat on the area there, and this area of supply took out this demand. So then we take this, we move it. We say we want to be selling here. Price came back, tested it, and now price is moving lower. So now this is what we can see on the daily. So we have the first area for reaction is here. Be aware of the fact that this has been tested once. We had a nice rejection, so we'll very likely get another rejection on the next time. But so you want to be looking to sell at the 124.15 area. Again, you can ask yourself the question. I'm going to zoom in so this is clear. What's the cheapest price price managed to reach after this area was established? Then you move the line up to here. It's about there. So the 124.28. So when price gets to the 124.28-ish area, this is a pretty nice area to sell. Stops going above here, like there, about the 125.20 area. So about 100 or so pips stop there. That's a pretty nice position, I think. If this is taken out, then there'll be an area of demand that does it, and then you have to identify that. Okay, so we have the weekly areas, we have the daily areas in play that have currently been in play. We go to the 4-hour and we do the same thing. We say, okay, we had this area of demand, not a pretty one. The reason I'm marking this off is because when price left here, we left very quietly, not a very nice area. We tested it once, we moved higher above this high. And we had a test, and price managed to move higher. Here we have a trend line break right at this area of daily supply. This is really nice. So this is no longer there. Then you ask yourself, well, what area broke the trend line? Well, we have a parent supply here. We have a child supply here. So there are two options. You could put your short entry here, your stop going above this child, or you could say, I want a little bit more protection for my stop. This is what I would prefer, and so I would put my entry to sell around there at the 123.94, and I'd put my stop well above this. So like somewhere like this, maybe something like that, maybe above this high there, so about like this, like that. I like that because you see when price left this area of accumulation, this is the most, this is the most expensive price went on the way back. So you want the stop to be above that. Okay, like that. So that'll be a pretty decent one there, I think. If we look to the downside, price looking pretty ugly. This is not supply here, so don't try to trade this because price did not, yeah, it's ugly. Price gap down, but it's gaps are pretty ugly. I'm not really pleased about gaps. They make you, that's just a little bit difficult to trade. But if we don't look at the gap, then we could consider this to be supply because, actually, I suppose it is supply if we consider the gap because we have a high, a low, a lower high, and a lower low. So we could draw a trend line like so, that the indicator's done for us. The area of supply that took out this micro demand is up here like so. So we might get a reaction here. Just be a little bit careful on this because, yeah, normally I like to wait a little while for price to stabilize before I start trading, but this gap will probably fill, and if we have a look on the hourly, we could probably see where this gap will fill. You could see how we gap down here. We have an area here of daily supply at the 122 area. If we mark off these lows, we have here, you see how price moved higher. The low of this candle is here. It's also a place where price was not able to close, so I think price would probably come back up to the 121.50-ish area, depending on what price looks like when it gets up here, and potentially have a reaction there, or it might feed back into this this price imbalance just here, which is still exposed, and alternatively all the way back in here. I'm going to wait for price to come back here before I sell because this is just too choppy and volatile on this time frame. Cool, good. And so as you've seen, what I like to do is I like to start on the weekly, go to the daily, the 4-hour, and finally, if you want, you can go down to the hourly chart to identify these areas. And they all make sense, but you don't want to be trading half an hour, 15-minute supply or demand that's simply only 15-minute supply and demand. It should be nested in 4-hour, daily, or weekly. You can easily do it, and if you're actively managing your trades, and I think you'll do just fine, but just be a little bit careful because these have a tendency not to hold as much as these whopping weekly, daily, and 4-hour levels. Okay, good. Good Lord, 38 minutes has already gone. Okay, and so yes, I mean, I've shown, I think, pretty clearly what we're doing here. We just look for, on the weekly, you look for the areas of supply and demand that are responsible for doing something. When I say doing something, I mean they are the ones that are responsible for consuming opposing supply and demand. And also trend lines. We use trend lines in a similar way, where we like to see trend line breaks, but we like to see trend line breaks happening at supply or demand. And so I wouldn't just trade supply qualified by a trend line break by itself. I'd like to see a reaction at an area. So if we go back to our previous example here, when price gets, okay, we have a look at this. Let's have a look at this. This will definitely be a trend line break in this little price structure here. We'll go down to the hourly chart. We'll zoom out, and you can see that we had a trend line break. Okay, so we had the trend line break right there where the indicator showed us. So we had a low, a high, a low, a high, a high. Price broke through it, and the area of accumulation is pretty kind of washed out. You can see how we have 1, 2, 3, 4 accumulation candles. That caused the break is this one here. So if we bracket the whole area. We'll go from the low of the body to the high of this wick. And this is where price stabbed into before it released. So this is how I use trend lines. I use them when they line up nicely at supply, properly qualified supply or demand. So this is one that I'll trade. I probably wouldn't have taken this because I would prefer that price came back up into here. This is kind of in the middle of nowhere, no man's land. But if you have a look on the small time frame, then you can probably get a clearer look. And let's have a look at that. Yeah, and you can see it pretty clearly here. So here we have a trend line right here. It broke, and here you can see this is very, very, very small, but you can see that we had, move this over here so I can see. A price sold off. We sold off, we accumulated, we sold off, and this we went up, we stabbed into this accumulation, and then price went down. So we would go here. You could see roughly, yeah, it's pretty close. If that would have been your entry, you would have missed it by a pip. But you can see pretty clearly in here what happened. You can see how we had price sitting on the area. We accumulated, this one cut through it, and price retested. We went very deep into this kind of this messy area of supply. And then price finally released. I wouldn't have done this. It's a little bit messy. I like to see clearer patterns, but you could have if you want fancy taking that one. That would have been just fine. Good. Okay, so that's a qualifying supply and demand. Right, do we have any questions? Volker, when you're on the smaller time frames, how are you using supply? Are you identifying supply and demand using the same rules, or do you have other ways of qualifying these trend lines you like to use? If we, just until you respond, if you respond, I go down to the smaller time frame, the 5 minute, you can do the exact same thing, which is the beauty of supply and demand. It doesn't matter what time frame you're on because everything is works the same. So if we have a look here, you can see, okay, we had this area of supply here, and this is not really supply because, I'm not going to use that because that's not good enough. It's not qualified. This one here, because when price left here, we moved above this high. It's been tested once, twice. So this is a 5 minutes demand that's still in play. We have, what do we have to the upside? We have this gap to close to the upside. So we have plenty of room for that gap to close. But we have this area of demand that's currently supporting price. So we had one test, and we have an unqualified. So we have a trend line break. We have a low, high, low, high. It broke. This area did it. We're a downward sloping trend line, so maybe reaction here. But I wouldn't do this because we haven't closed the gap yet, and so price likes to gravitate towards the point of origin for the gap before it figures out what it's going to do. So not a good trade here. But you can see this works on all time frames. We go to the 1 minute chart, you'll see the exact same thing. So we have this area here, which we tested once, twice, 3 times. We see how price accumulated on top of it. Price went through. Which area did it? This one here. Price tested that, went through. Then price went through it. What area consumed that supply? Down here. Has price been back there? Yes, price cut through it. You can see just there we gap through it just there. But you can see at any time frame, no matter what you're doing, you'll notice this. And I did an experiment a while ago where I focused on areas qualified by the indicator that have a significance of about 30, 34, nice round number. Well, actually, I think that I have to make sure that my, yes, 0, 1, 2. And I was trading areas that are qualified here. I don't remember if it's a 1 minute or the 5 minute, but if we zoom out, let me put a few more lines on there. The indicator is going to show exactly where to do this. Let's find a different pair where there's no, it's a little bit clearer. It helps if you turn the lines on. Okay, so here we can see that, that we have, we're on a 5 minute chart, and we have really significant areas that are currently being marked off. So you'll find that when price gets up to these levels, it reacts pretty forcefully. We had, this one was established, price has not been back to this area yet. We had this one that is established, so we're 34, just around here. It was established, it was qualified here, it held once, twice, and we have this one here. Actually, that wouldn't have been drawn just yet because that's only 20 away. You know what, we're going to change this. So we have 20, so we can see more lines. And so this line would have been here when this price came back to this. So we tested, we formed this, price tested it, we came back down. Now we're getting close to this one here. I don't like this one here because this wick cut through it pretty much. But I do like the one here at the bottom. It's been tested a couple of times in the past. But you can also just watch these on the small time frames and just ensure that you have a trend line significance with a very high value. And my testing said that over 30, you get some very, very whopping levels. And this is great because you can simply trade these areas. And I've done a lot of back testing with this software over the years, and it's very clear that when price gets back to an area like this, or let's go to a different time frame, like an area like this, price is going to have a very, very difficult time moving through it. Something big is going to have to happen for that to happen. So just play around with the lines. If you're a little bit uncertain about where to put your entries or what to focus on, just turn this number, the trend line significance, up to a very high value. I've got it on 34 here. You can do it on whatever you like, 20. And this will enable you to identify levels that have a lot of clout. If we go up a little bit, you can see that we have from here. You can see how this one here was established. Price came up, touched it. Now we're respecting the trend line. So when price comes back down to here, here, and here, there's probably a bit of resistance, sorry, a bit of support for price. When price comes back down here, we have a weekly level overlapping with a daily level. We have the same at the top here. So price is going to have a struggle to move through there. So just keep those in mind. Okay, I think I'm going to leave it at that for the time being. I've been rambling on for about 50 minutes. We'll try and maybe keep this one a little bit short today. If you have any questions about today's symposium, or you want a specific topic to be discussed during one of the coming symposiums, please let me know, and I'll be pleased to get everything fit in. Gustav, well, I'll log off for now. Have a super day. Thanks for being here, and I will see you next week.